Hi everybody, it's me, Greg Manarino, back for my post-market wrap-up for today, Wednesday, January 10th, 2018. I'm actually thrilled that this trading day is over because it was sincerely out of control. I have a lot of stuff I want to talk about here. Let's start off with this. So apparently there is some kind of news that China, one of the largest holders of U.S. debt, doesn't feel comfortable holding all this debt anymore, and they may not be buying much more of it, and this rattled the markets big time. The bond market got slaughtered. The Dow Jones Industrial Average was down about 130 points at one particular time. Then what happened? Well, again, I was posting snapshots of this all day long of the bond market, which you hopefully are watching live on my website, traderschoice.net. Bonds started to flatten out, and then they actually got bought up a little bit. The market rebounded. We still finished lower, but only fractionally lower across all of the major indices today. Junk bonds sold off pretty hard today as well. You know how you have to watch that. Junk bonds selling off is usually a sign that the market, doesn't want to take on too much risk. The dollar was down with the debt. Gold and silver were initially higher. I think silver finished to the negative. Gold put on a little bit of a gain here. But this just goes to show you how dependent the market is on the relentless acquisition of debt in perpetuity. That's all that's driven this market since the Federal Reserve started buying everything after the 2008 meltdown, for which they still are. Again, the Federal Reserve is not magical. They can't just say, hey, we're going to keep interest rates at whatever they want them to be. They have to get into the market and make it happen. So understand, the Fed, their balance sheet is as bigger than the GDP of most countries. It's unbelievable. But I think we need to get used to a few things. Before I get to there, let's talk about this. I closed my positions today. I posted it on my social networks. For those of you that are following along with me, I managed to pull out a nice profit after being in the negative with Bank of America. 22% profit on that one. Just a 4% profit on AIG. That was, I only held that for like a day. All right, whatever. I just did not like the action of this market, and I think a few things are about to happen. So let's talk about this, what I'm going to call is a new paradigm in this market. Number one, okay? I check my email box every once in a while if I want to, have a horror show. And I had all of these emails. Greg, do we short the market? Greg, I'm shorting the market. A lot of people told me today, Greg, they're buying puts against the market. I just doodled this. What do you think? Do not short this market. I know in a normal environment it would seem like the right thing to do, but we're not in a normal market here anymore. There's a new paradigm going on, and we witnessed it today. First of all, nothing seems to get in the way of this market. Literally nothing. And with that said, we don't get 1% pullbacks anymore. We don't get 3% pullbacks anymore. I can't even remember the last time we even had a 1, 3, or even a 5% pullback. Just doesn't happen. The new paradigm is simply this. Pullbacks are like a half of a percentage point. When we get these kind of moves in the market, it looks like that's the time to start buying. And that's what happened today. Now, I'm not saying that you should get in here and start buying tomorrow. Hopefully, you have your own trading system that you're using, or one of mine, which will tell you what to do on top of you watching the bond market action. So, good luck to those of you that wrote to me today and said you were shorting the market. It might work out for you. It might not work out. I would not short this market here. What I would look to do, what I am looking to do, is pretty much to stay on the long end of this market. If it pulls back a little bit, I'm going to wait for it to bounce because, again, nothing is getting in the way of this market. It's a new paradigm. There's no such thing as an even 1% pullback anymore. This is what we get. 0.5% pullbacks. It's the new norm. It's been the new norm now for a long time. Now, I want to talk about a few other things here. Now, let's just say that maybe this rumor with China is correct, that they're gonna back off from propping up the U.S. economy. Unless other countries follow suit here, which I spoke about in the video that I did earlier today, which I think is probably unlikely for a myriad of reasons, which I could probably fill up an entire video about, but let's stick to how we can capitalize on all this and what I think is going to happen. Let's just say if it's true that China is not going to be buying debt, the Federal Reserve will buy it. There's no doubt about it. Not only will the Federal Reserve buy the debt, but they're going to make the banks buy it through a backdoor channel, which they're probably doing already. So that's why I think the market did what it did today, reacted the way it did. I mean, down triple digits, about 0.5%-ish, like I wrote here, and then pretty much rebounded. And we need to watch this over the next couple of days. Watch that bond market. Again, look how the market reacted to what happened. Bonds sold off, stocks followed, then all of a sudden, no, we got to start buying. And that's what they did. Go look at the chart on my website. You will laugh your rear end off, because you can see exactly where they started buying. Who's buying? Who is buying here? Who's buying here? I mean, you got to be nuts. You want to hold a bond in this environment, man, let me tell you, either you are a mental midget of epic proportions, or there's something else going on. And then I think the other thing is going on, and you know what I'm talking about here. No one would be buying a bond here in a market that's going nowhere but higher, in a market that only experiences these fractional pullbacks and then continues higher. Oh yeah, I'm going to lock up my money in a bond for X amount of years, earning in the negative, if you want to factor in the actual rate of inflation, for which they lie about all the time. Oh yeah, that's, where do I sign? Where do I sign? Do I sign right here? Where do I write? It's insane. But I think you get it. It's fake. It's rigged. Nothing makes any sense anymore, and that's just the way it's going to be. It's the new paradigm, people, which has been going on for quite a while. The new paradigm is the old paradigm, and that's just, look, I just want you and me, and we have been, seriously, to capitalize on what is going on here. Have you been following my trades? Because I post them. I tell you exactly what I'm doing when I'm doing it. How many trades have I had lose in the past, I don't know, 20, maybe 2? So I'm doing something right here, all right, and I hope you're following along with me. I'm trying to make this simple for you. Now, with that said, since we understand what they're going to do, if this is true, China's going to stop buying debt, someone else is going to buy it, is buying it, bought it today, propped up the bond market, which subsequently pushed stocks almost back up to the flat line. I'll tell you something. Today's market action, stock market action, to me, unless we get a follow-through sell-off tomorrow or the next day, is very bullish. Very bullish. And I will not be shorting this market. I will not be shorting this market. I will be looking for opportunities to get long. Pick an index. I think really that's what I've been talking about. I like trading an index, probably the S&P or the Qs. Not so much the diamonds here, people. But anyway, I will keep all of you on top of what I do, so you can capitalize on this as well. Bet against the debt. Become your own central bank, people. I can't stress these enough. They're going to continue to inflate. Deficits are going to get larger. Debt is going to... Like, you have no idea where this is going to go. If you have not seen the interview I did with Greg Hunter, we actually talked about this. It came out just over the weekend. You should have a look at that. As a matter of fact, I'll place a link to that interview. If you did not see it, you really need to watch it in the description of this video. All right, with that said, let's see what happens overnight here with bonds. And just one more thing. I know I'm running off the mouth here, but these issues that we're facing here right now, and if Bill Gross is right about this issue in the debt market, now we're going to be entering a bear market, is dollar negative, is commodity positive, it's cryptocurrency positive as well, despite the fact well, actually, it's kind of odd. If you saw the action in cryptocurrencies today, most of them were up today. Then I think about half of them finished down. But that's just because of the action that we're seeing with the market and with the bond market too. If anyone doesn't believe out here that what's happening in the crypto market really hinges a lot as to what's happening in the debt market, which is the largest market of them all. By let's put it this way: if you took the combined market cap of every single cryptocurrency out there, it would be like one grain of sand on a beach compared to the global debt market. So before crypto people get on their high horse, maybe you should pay attention to that, because that's just the way it is. All right. With that said, I will see all of you in the morning. And just remember this, for those of you that wrote to me, do not short this market.